So Fidelity Special Values is a very flexible mandate. So as long as assets are 80% invested in the UK market, we can pretty much buy everything that's available. So everything all the way down to £100 million companies, all the way up to the giants of the UK market like a HSBC, Astra or Shell. And so we really take advantage of that flexibility, including that option to invest up to 20% overseas. So the strategy we employ in the trust is very much a value contrarian strategy. And what that means for me is looking in parts of the market that other people aren't looking, for companies that are worth more than they're currently trading at on the stock market today. Now, that might be because we're in a very unfashionable sector. Maybe the company is just small and overlooked, or maybe there's a current near-term issue that's really clouding investors' judgment as to what the company is really worth. And it's really exciting to me to look in these areas where other people aren't looking, because I think that's where you can identify the alpha opportunities, the ability to outperform, because they're areas that other people aren't looking. And that's very much what we're trying to do in the trust. So the trust is quite diversified. So there's about 100 names across the portfolio. And it's very much this that we look to use to minimize risk, in terms of looking for lots of individual different ideas that play to lots of different themes across lots of geographies. The UK is a very geographically diverse market. Only around 25% of the earnings actually of the UK market come from the UK, and it's about 40% in the trust. Now, that said, we're not looking to minimize short-term volatility in the fund, because for us, loss means permanent loss of capital. So we're looking for sort of not to buy companies that we think are on shaky ground over the long term, but could be quite volatile in the short term, and diversifying those risks across the number of names in the portfolio. So we generally have something which is working at any one time, rather than playing to only a very few different ideas each time. So the mandate is all about investment performance, and we're looking for companies that we can produce a good return on a 5-year view. We do think about risks in terms of ESG, in terms of if that's going to affect the fundamental value of the company, but we don't have any particular ESG requirements for the fund as a whole, and so we can really buy anything that's available in the UK market. Gearing is something we use extensively in the trust, and tends to be within a range of sort of 5 to 20%, and is very variable. And I think it's been a key area where we've added value over time, because it's very bottom up. So if we're seeing lots of good ideas, lots of interesting companies, we move the gearing up, and the opposite if we're not seeing those opportunities. And that tends to have meant that the trust is most geared after market falls, when there's lots of opportunity, and least geared when the market is actually at a reasonably high valuation and potentially is going to fall. And therefore, we've been able to increase the total return from the portfolio as a whole by having this very variable use of gearing over time.